And as always, patreon.com/shades and trades. If you want to join the Discord, I'll see you guys in there. Alright guys, in this video, episode 13 of the Learning to Read Charts series, we're going to talk about averaging. Up, down, using levels, using percentages, using fractions of all things. I hate that I have to talk about fractions because I hate fractions so much, especially when you have to change them around to make it make sense. But we're going to talk about averaging up and down because right now I think this is the perfect time to come out with this video with everything coming down and people asking me, well, how much should I buy because I only have, $3,000 or $5,000 or $2,000 or $1,000 or whatever the case may be. Everyone's different. Obviously, the cat guy in the Discord, Katam, I don't remember his name or her name. I shouldn't assume it's a guy, but he has 100K or she has 100K just sitting on the side ready. Like he or she is ready to deploy that 100K. So everyone's account size is different. Everyone's situation is different. So I'm going to show you the best way to average up and down. So the first way is, and you guys know me, I'm going to keep it short, sweet, to the point. The first way is, let me see, where's my line segment? So you're going to grab the horizontal line segment. And let's say you're very interested in SoFi, right? You just love SoFi. You want SoFi. Please, more SoFi. So you would look, and the first thing you would do is find your levels, right? So here's some support right here, right? And how do you know? Because it came down and then finally reversed and came to a high here at 29, which is another level, but that's a level. Here's a level. And then if it does come down, where's our next level? Right here at 24. And then you keep doing this. Here's another big level, right? It's almost like every dollar it drops. Every dollar it drops is nothing more than opportunity. So there you go. You got a bunch of levels here. So if you know that it's possible that it does come down this low, right? Because the purple line, you know how to use the purple line at this point. You've watched a bunch of these videos. The purple line is down here at 22.62. So you know for a fact that it is very possible that it comes down here. You've already seen it with your own eyes. Some of you who are newer, you messaged me. You're like, oh my God, you're right. It works. It did come down to the purple line. Even one guy in the Discord was like, I thought you were crazy. Like it would have to sell off so much to come down to the purple line. Well, guess what? The charts don't lie. And that usually means I don't lie because I just go off the data. So yeah, it is possible for it to come down to the purple line. We've seen that already. So that means because you're going to average down based off of levels, you know that, let's say you have $1,000, like, okay, I can't average down right here. I can't start averaging down here. I need to wait for it to come down to 25 and I have $1,000. So what you could do is split it into fourths because there's at least 4 levels to get to the purple line. You can add $250 worth here, $250 worth here, $250 worth here, $250 worth here. Once it comes to the purple line, you're getting such a massive discount. It doesn't matter. You can just start adding and accumulating. And you can average up as it goes up, back to the purple line. I'll show you another example, but I just wanted to show you this is how you do levels-based averaging down. And I'm using SoFi as an example. Let's use another example. I might just keep it focused on levels. Let's go to what's a good one? What's a good one, guys? Something that hasn't come down too much. No, I need something more. Something a little riskier. Let's go with CoreWeave. No. Let me see if I can find one. That's not absolute trash. Let's see if I can find one that's not trash. Okay, I see one. I don't want to do Richtek Robotics. We can do NVTS. Okay, NVTS is perfect. So, right, let's go and measure our levels. So this is a big level here, right here. Like this is, you can see here, it found a top and then came down nice and low. Found a top here and pulled back. So that's a level, and it's no surprise that it's holding there. That's also where the purple line is. So it's no surprise that buyers continue to show up here, right? That kind of makes sense. You have the purple line there acting as support and horizontal support on top of that. So with that said, this is where you start buying. You would add 25%. If it comes down here to 570, you would add another 25%. And then if for some reason it comes down to 428, boom, you add another, 25%. Now, Shades, what happens if I add $250 here and then it goes to the moon? Cool. You turn 250 into 500. Congrats. Again, I'm just using 250 as an example. Obviously, if you have a bigger account and more money, then you can add $2,500 worth. And if it comes down here even lower, cool, you add another 2,500. And then on the way back up, obviously, the lower it goes, the more you have to gain on the way back up, right? So if it comes down for some reason to 570s, I mean, on the way back up, that's a 200%er. So it going down actually benefits you because you get to average down and you'll make more on the way back up. Funny how that works, right? So there you go. Again, this is levels-based averaging down. You mark the levels and you just keep averaging down at those levels. You wait for those levels. You don't throw money at it if it doesn't go to those levels. You only add at those levels because you know that's where it makes sense for buyers to show up. And if they don't show up, that's fine. You keep averaging down. The whole point is to average down and take advantage of the discounts offered by the markets during crashes, bear markets, etc. All right, so that's another one. Let's do one more. BMNR. No, you wouldn't even bother with this one. If you watched episode 12, then you wouldn't even be you shouldn't be trading at BMNR because it's absolute garbage. It just goes sideways over the long term. Revenues aren't exactly going to the moon, right? So you wouldn't bother with this. Again, if you watched episode 12, this wouldn't even be on your radar. So we're only trading companies that meet the requirements, the criteria that I established in episode 12. If you did not watch episode 12, you skipped a very, very important episode. Okay, MP Materials is another good one. I already have the levels, out. So again, levels here. So the purple line acts as a level. You don't need to draw a line, but technically it does act as a level. And then if it comes down here to 50, that's another level to average down, right? And then next would be 45 if for some goddamn reason we go that low. And if for some reason we just absolutely tank on the market, so let's hope not, and it closes this gap, 30, 35, I don't know why, but it just loves these nice round numbers, right? 40, right? So there you go. If for some reason it just really starts dropping, and again, you'll notice a lot of these stocks, we're averaging down on them when they're already at the purple line. Because if they keep dropping under the purple line, we're getting massive discounts. That also means we're probably crashing really hard, or we're in a bear market. So, because we don't start buying until it comes to the purple line, right? If you recall. There are exceptions, of course. If it's a stock like Nvidia or Palantir, those rarely come down to the purple. They rarely come down to the purple line. Like rarely. Like it can take them like a year and a half for them to come down to the purple line. So with those, it's just better to average down as it goes lower, despite it not being at the purple line. So there are exceptions, of course. Those are really great companies, like incredible companies. They're like they're kings, right? They're the king of the crop, right? Like there are exceptions, but anything else outside of those companies that are well established, NP here, for example, it's no Nvidia, it's no Palantir, right? But if it keeps going down lower, you're getting hella discounts. And assuming the company's, doing well financially on the revenues, and it keeps climbing over the long term on the quarterly, right? Like it is literally trending on the quarterly, right? It's been trending since July 1st of 2024. So it is trending. And since July 1st of 2024, guess what? We pulled back to the purple line multiple times. And every time it was a massive discount opportunity. So you're buying at the purple line your first, 1/4 or 1/5 in this case, and then you'd wait. Is it going to come down to 50? Cool. I'm going to add another 1/5, which you did, right? You would add 1/5 here, 1/5 here, and then, you would maybe average up and, oh, look, it came here, then came back down to the purple line. Cool, another 1/5. You would just keep adding. Now, once you have all of your position in there, whatever, you did the best you could. You're not going to time the bottom exactly. Who knows where the bottom might be? It might be here. It might be here. Maybe it comes all the way down here. Who knows? The whole point is to buy at the purple line, then average down intelligently via levels. That way you're getting the best average as possible. Trying to time the bottom, good luck. Because I've seen too many people try to time the bottom and then they they're afraid to buy here because they're like, oh no, what if it just keeps going down and then it goes up to like 78 and then they're like, oh, I should have bought at 58. Just dollar cost average via these levels. I was gonna go over percentages as well, but that would be too long of a video. Let's just keep it at levels. We're just focused on the levels. So there you go. If you watched episode 12 and you build on that with episode 13, this episode, then I think you should be able to dollar cost average intelligently and get the best average possible and not have to worry about like, oh man, stop trying to time the bottom. That's the biggest thing. Too many people trying to time the bottom. They want to immediately buy and immediately be in the green, never see red. That's just stupid, especially because we're tanking. If we're tanking, we're just going to keep going down. You're not going to time the bottom. I've seen too many people try that and it just never works out. They just keep losing money because it just keeps going down. It's just silly. It's just very, very stupid. It's just that the stock market's not for you if you're going to not listen to me when I tell you stop trying to time the bottom. That's like sometimes the biggest enemy. It's the self, and those people don't realize it. Stop trying to time the bottom. You're buying at such a massive discount already at the purple line. The fact that you get the opportunity to add even cheaper below the purple line, that's nothing more than a blessing. But I know most people don't see that way. They just see their account being red and more red and more red as it goes down lower. And if we do tank like this, that means the market as a whole is tanking real bad, or something happened very specific with MP. Maybe the government announces, oh, we're done with MP, then sure, it's going to tank and crash and go to, whatever. But until that announcement is made by the government and they break off their government contracts with MP, then there's nothing to be concerned about. Any dip is a dip buying opportunity to make a lot of money on the way back up. I have a price target of 100, which you yourself should be able to measure because in my other videos, I've already shown you how to measure your levels, right? So from purple line to 100, 78%. So now you have a price target here of 100 and you're going to make 78%. Boom. Like, you need to be combining all the knowledge that I've been giving you in all these videos to essentially come up with a solid game plan and pick the right stocks to trade. Because it doesn't matter how much it doesn't matter if I can give you all the strategies in the world. If you're trading garbage, it's just not going to work out, right? Because my strategies work, but it's not going to work on trash. If you try to use my strategies on trash, you're just going to get destroyed. My strategies hinge on you picking good companies. If you're picking garbage, that's on you. That's all I got to say. There you go. That's how you average down using levels, and that's it. We're gonna go over how to use percentages and using the MACD to as a signal to average down, which I've never even talked about because that's my little secret. But I'll give it to you in the next episode. All right, that's it. And as always, patreon.com/shadesandtrades if you want to join the Discord. I'll see you guys in there.